talk to you about a company that's different. And there's a couple of reasons for that. Your safe harbor statement, you can read it at your leisure. And just going forward, in terms of alignment with shareholders, I have 220 million US invested in the company. I own 17% of the company and take $1 a year. Our assets are spread through the Americas, North and South America. They're gold, gold and silver, and copper. Copper right now has been the largest driver, and you'll see why in a moment. We're in prolific gold areas, Timmins, Nevada, Deseado Massif in Argentina, also in Mexico. Our production is increasing, our costs are going down, so is our debt. But we went through 3 horrible years of missing guidance, and the market punished us brutally, which we should have been punished anyhow for that. So this is just trying to give a sense when management, we look at the company, and there's several parts to it, and we try to estimate the value per share. So McEwen Copper has 2 properties, Los Azules and Elder Creek, and most of the discussion will focus on Los Azules. But we've taken 2 other properties in the same province in Argentina as proxies for what it might be worth. Jose Maria was bought for $485 million a couple of years back, and Filo has got $1.7 billion market cap. The mid price, the $7.48 per share of McEwen Mining, is reflecting the most recent deal we did on McEwen Copper at $26 a share that gave it an implied value of $800 million. The low is taking Jose Maria's value and cutting it in half, and the high is taking Filo's and cutting it in half. And you'll see in a moment why we think our property is better than both of those. We have a royalty portfolio, 5 royalties, 1 on Los Azules, 1 on Elder Creek, 1 around Newmont in southern Argentina, and 2 in Nevada. And then our gold and silver properties, and we basically, there's a peer group, 5 companies. We said if we matched the valuation they have, we'd be at $821 per share for the gold. If we took 50% of it, $410. And if we were 50% better where we've been in the past, we'd be at 12. So we're currently trading just below 7, actually quite a bit below 7. We're down around 630 or 40 like yesterday. And you can see the range that we see underlying it. The copper project is located along the spine of South America. Chile and Peru provide 40% of the world's annual production of copper. Argentina is in the same neighborhood. There's Filo, Jose Maria, El Pachon, Altar, ourselves, all in the province of San Juan. Looking at McEwen Copper, it is inside McEwen Mining. It's a private company. And back in the summer of 21, we decided to try to separate it. The market has a preference for pure plays, so we'll create a copper play and a precious metal play. I led the financing with a $40 million investment, and we raised, I thought we'd be able to raise another 40 right after that, but it took a year. And in the August of 22, we closed on $82 million at $10 a share, giving a value to McEwen Mining of $175 million. We did another financing in February, early March of this year, where we raised $30 million from Rio Tinto and 30 billion Argentinian pesos from Stellantis, the 4th largest car manufacturer in the world. And then just last month, we closed on $10 million from Rio and $42 billion from Stellantis again. So at $10, $19, $26 a share, we've raised just under $370 million US in the last less than 2 years. And you can see if you go over to the right what the value per share is. We're we felt by separating the copper, we could build the value of McEwen mining, and you can see the value at the latest financing is just under $7.50 a share just for the copper. Just to talk about those two proxies I mentioned, Jose Maria and Filo, just starting in the upper left-hand corner, all these properties, including ours, are in the state of San Juan, province of San Juan. We're at a lower altitude than either of them, so it's easier on the workers, it's easier on the machines. Our grade and the size of our resource is bigger than both of them. The distance from infrastructure, we're closer. We're at an earlier stage of development in terms of finances, so we've done a PEA that we released in June, a preliminary economic assessment. But we're moving towards a feasibility study, and that should be out in the first quarter of 25. In terms of the cost profile as projected by the PEA and their other studies, we're in the lowest cost quartile for the industry of undeveloped properties. In terms of ownership, McEwen Mining 47.7%, Stellantis just over 19, Rio at 14, myself at just under 13, and two other groups. Rio Tinto, most of you know, second largest mining company in the world. They have a process called the Newton process, and we think it might apply to this operation. We were looking at their technology, and then the parent came along and said, this looks like an interesting deposit. So they've made 3 investments in it already. Stellantis produces about 160,000 cars a year in Argentina, or vehicles, and they were looking for green copper and an undertaking by us that we would be net zero by 2038. Myself, Mining Hall of Fame, Order of Canada, started Gold Corp, and then we had a great run on looking to build another Gold Corp. Since the start of last year, well, September of last year, we've outperformed the GDX, GDXJ, gold, copper, NASDAQ, the Dow Jones by a significant margin, and you can see the red arrows are indicating the financing. So we've been pulled along by the copper deposit. In terms of size, it's the 8th largest undeveloped copper deposit in the world, and it's about the 3rd largest not owned by a major. In terms of the PEA that we put out in June, looking at 175,000 tons per annum of copper, 27-year life, a low strip ratio, initial capital $2.5 billion, a payback, and just over 3 years, 3.2 years. This mine life reflects we'll be mining only about 40% of the deposit. Newton's technology could address the other portion. So it's a multi-generational mine when it's built. Looking at the economics, this is Wood Mackenzie's study, and we're in the bottom quartile of the cost curve, as you can see on the left. And in terms of carbon emissions, we would be emitting 10% of what a conventional copper mine of this size would do. Our energy is all renewable, provided by the power company in Argentina. They have wind, solar, hydro, and they have a letter of intent to provide 100% renewable. The equipment will be electric. And we're trying to build a mine that is very different. This is a picture of an architectural rendering of what the accommodation will look like on the side of the mountain. Large translucent building, hanging gardens. It will be growing a lot of its fresh produce inside. It will be treating its wastewater inside. You won't have to truck it back down the mountain. And it would incorporate a hotel. And we're looking and saying, we're not looking to disguise this mine. We're looking to make it a jewel in the Andes, a jewel for the company, and possibly a model for mining going forward, one of the models. And I say that a model because there is, according to PwC, there's over $20 trillion in ESG money floating around the world. And our industry, we should be looking to get some of that. Stellantis came in, and that was the first example of what Henry Ford did in the past, where he was going to the Amazon with Firestone to get rubber for his tires. He was going to Michigan for copper. He was going to Sudbury for nickel. And there's this vertical integration that's taking place. And if you can be moving more green, you can attract some of that plus $20 trillion. We could be seeing some of the lowest cost of financing for the industry. This all happened, 2 years ago I brought in an architect who's known as the Steve Jobs of the green, living, building sustainable space, and said, help us redefine mining. We have to attract the youth more because there's a shortage. We have to get social license, and we want to build something that will endure. This would be an aerial view of that accommodation, sitting into the side of the hill, maximizing the amount of solar energy it gets. In the middle, you see a little soccer field. We're in Argentina. So I haven't really deserted gold. Every time I look at a deposit, I always try to put it in a gold lens. So when I look at this deposit, it has measured and inferred 37.6 billion pounds of copper. So I looked at the copper price and the gold price, you come up with a ratio. It's a little over 546 pounds of copper equals 1 ounce of gold. On that basis, this deposit is the equivalent to a 68 million ounce deposit that will be producing just under 600,000 ounces a year at a cost of under $600 an ounce. In my book, that's a really good gold deposit. That's a good copper deposit. This is our resource numbers. Michael Medding, who's at the top of this picture, ex-Barrick, he ran Barrick's operations in the province of San Juan, where we're located in Argentina. He's assembled a very strong management team at a local level, all Argentinian, all having worked for Humana, Barrick, Lundin, Trafigura. So they've got a lot of experience in that area. And we haven't finished exploring this. At the north end of the deposit, you can see this column, a drill core. It was 1,052 meters of 0.29, but inside of it was 480 meters of 0.42 copper. So we're doing exploration outside of the area. As I said earlier, we've spent just under, or raised just under 400 million US since we started financing it. We're going to do 53,000 meters of drilling this year. The PEA we put out in June had a 27% increase in the total copper resource. And just a word about McEwen Mining. We had some penalties in the last couple of years. We've improved our working capital from 44 to 92 million. We've lowered our debt from 65 to 40. We haven't done any financing in the company this year. Our gross operating profits are increasing, and so is our production. This is, whoops, go backwards. You can see the trend in terms of gold production from our operations in Timmins. We've been dragged down by our operations in Nevada, but even that, I'm encouraged to say, we're seeing our recoveries, gold recovery, daily gold recovery from our heaps going up quite nicely. And in Argentina, we surround Newmont Cerro Negro mine, and it's coming along. The gold production is the same, the silver production is down, but it's moving in the right direction. We're looking to do about 150,000 ounces of gold this year. So if you look at McEwen Mining, you can buy it for the copper and get the gold for free. Buy it for the gold and get the copper for free. Thank you.